host, Bo Eckstein, and today we're going to talk about CPACE financing and the states that it is approved in today. So if you're watching this on YouTube or the website, you can see on the screen all the states that are green. Those are approved states for CPACE financing. So California, Nevada, Oregon, Utah, Colorado, Nebraska, Texas, Arkansas, Florida, Kentucky, Illinois, Wisconsin, Minnesota, Michigan, Ohio, Kentucky, Virginia, Pennsylvania, New York, Connecticut, Rhode Island, and Florida. These states right now are approved. Now, they're approved at the state level, and then some of the counties have not yet opted in. And so some of the counties that aren't yet opted in for the program, it is not that hard to get opted in. Some are more challenging, but typically, if you're looking at the map, the green states here, those states are already approved and eligible for CPACE financing. So what is CPACE financing and why would you want it? If you're doing large renovation on commercial type properties or building ground up on asset classes like industrial, multifamily, assisted living, adaptive reuse projects, CPACE financing comes into the capital stack and gives you higher leverage. It's a lot cheaper than mezz or pref equity, and you're able to achieve, like I said, higher leverage. So right now you might be able to get 60, 70% loan to cost from a bank. Well, CPACE financing fills the gap. It funds eligible products, green eligible products in the construction budget. So typically 15 to say 30% of line item budgets could be eligible for this program. And essentially you have your senior lender, and then you have CPACE financing that comes in. It doesn't come in like a mortgage on the property, like a debt, like a traditional lien would be. It's actually an assessment like you would see in the property tax bill. So it's a little different. You have to get the senior lender's consent that it's okay to finance with PACE, and that's kind of the trick of this whole thing. So it's better when you're doing development projects to start with the end in mind, engage a CPACE lender first, get the property pre-approved as far as, eligible loan proceeds, and then you go out and find your senior lender from there. So that's how we're doing this in the capital stack.
Are you in the market for a commercial loan? Did you find the perfect opportunity but need funding? Have a special situation? At Find the Bank, you will get quotes with competitive rates and terms from multiple lenders without any hassles. Have a multifamily property, construction project, owner-user property, industrial, mixed use, hotel? At Find the Bank, you can get nearly any kind of commercial financing. The process is simple. Once you send us some information about you and your property, we send back a quote sheet. Then we quickly connect you with an advisor. You won't spend hours calling multiple banks trying to find the right person to talk to. We'll connect you fast to the right person, hassle-free. Better terms than you could get on your own. Go to findthebank.com and complete the form. An advisor will be connected with you within minutes to discuss your specific financing needs.
Typically, you're going to want 15% borrower or sponsor equity in the deal. And there's kind of a underwriting system that we use that measures it. There's debt service coverage ratio, there's the PACE to value ratio, there's certain ratios we use to underwrite these deals, and collectively we underwrite on the stabilized value and the stabilized cash flow, and we're looking for, depending on the asset type, a debt service coverage ratio of anywhere from 1.15 to 1.45 depending on the asset class itself, and that's with the senior debt and our debt based on the stabilized cash flows and values. So we're able to achieve higher leverage at a lower cost typically than pref or mezz debt, and it works really well. And the key for developers out there listening to this is to engage us first on these type of projects, and then go out and get senior debt, because although there's been 250, 300 lenders out there that have already, banks and credit unions that have approved it, there's a lot of banks and lenders that don't know anything about CPACE, and they just are a little bit resistant. So there's a process of engaging these bankers to get them to approve this, and then depending on where the property is located in the county and the city, there's different charts as far as what items are eligible for the build, but really to assess these properties, we need a pro forma, a value, a stabilized value, a construction budget, and some information on the sponsors and developers. We can quickly do a rough kind of quote, and then from there we do a term sheet to let you know what you can expect. You get a term sheet. It gives you your gross loan proceeds, breakdown of the costs and expenditures, and then from there, that's when you go and you shop for your senior debt on these development and construction projects. We're seeing a lot of them coming in for adaptive reuse, where you're taking an office building converted to multifamily or something like that. A lot of PACE financing in there, multifamily, hospitality, assisted living. It's a great tool. I'm happy to share my knowledge with you if you're interested in learning all the benefits of CPACE financing. Thanks for plugging in, and I will see you on the next episode.